The ISM Non-Manufacturing Index, now known as the Services PMI, measures U.S. service sector economic health. A Services PMI above 50 signals economic growth. Below 50 suggests contraction. The index surveys over 400 firms in 15-plus industries, assessing activity, orders, employment, inventory, and pricing. As a leading indicator, the Services PMI helps investors gauge market conditions and potential investment opportunities. Combined with the Manufacturing PMI, these indices provide a comprehensive view of the U.S. economy's goods and services sector. Get personalized, AI-powered answers built on 27-plus years of trusted expertise. What is the ISM Non-Manufacturing Index? The ISM Non-Manufacturing Index measures the health and performance of the U.S. service sector. Also called the Services PMI, the index tracks economic trends in industries that make up a big part of the U.S. economy, such as healthcare, retail, finance, and transportation. Surveys from more than 400 service companies make up the survey results, which look at factors like business activity, new orders, employment, and supplier deliveries. Investors, economists, and business leaders watch the index because it acts as a leading indicator of economic growth and market changes. Essential insights for services, PMI investors. The PMI is compiled and issued by the ISM and was developed in coordination with the U.S. Department of Commerce to measure various activities within supply management. The PMI is divided into three separate categories: the Manufacturing PMI, the Hospital PMI, and the Services PMI. These indexes guide supply management professionals, business leaders, economists, and government officials by monitoring the economic conditions of the nation. As noted above, the ISM Non-Manufacturing Index, or the Services PMI, provides stakeholders with insight into the state of the nation's services sector. The index contains a diffusion index based on survey data. A diffusion index summarizes whether purchase managers believe the market is expanding, contracting, or staying the same. The Services PMI contains the economic activity of more than 15 industries, some of which include accommodation and food services, agriculture, forestry, fishing, and hunting, arts, entertainment and recreation, educational services, finance and insurance, healthcare and social assistance, management of companies and support services, professional, scientific, and technical services, public administration, real estate, rental and leasing, retail, trade, transportation and warehousing, wholesale, trade, utilities. The Services PMI comes out in the first week of each month and provides a detailed view of the U.S. economy from a non-manufacturing standpoint. Data in the index is not very volatile. Trends can go on for months, which is valuable for analysts who focus on making long-term economic forecasts. (49.4%). The April 2024 reading for the Services PMI. The services sector showed a drop in economic activity in April 2024 after 15 consecutive months of growth. This was the first time the index declined since December 2022. Monitoring the Services PMI can help investors better understand the economic conditions within the U.S. Some service sectors may experience growth while others contract, which can be helpful when choosing which industry to invest in via equities or corporate bonds. Services PMI provides significant information about factors affecting total output growth and inflation. When the business activity index increases, investors may infer that the stock markets should increase because of higher expected corporate profits. When used alongside the ISM Manufacturing PMI, the industry coverage between the two reports account for a significant portion of the goods and services produced in the U.S. economy, measured by gross domestic product, GDP. The Institute for Supply Management is a nonprofit organization with over 50,000 members across 100 countries. The ISM helps to establish education, research, leadership development, and certification in various areas regarding the profession of supply management and purchasing. Analyzing business activity trends. The Services PMI report provides an overall outlook for business activity in the United States. The PMI index is reported as a number. A reading above 50 represents economic growth or expansion, while a reading below 50 represents a contraction. Examining new order data. New orders include new sales that were recorded for the month and whether businesses have seen increases or decreases in demand for their services versus prior months. For example, retailers might report a high demand for their services at year end due to the holiday season. Employment activity in the services sector is measured monthly. The report shows whether employment grew or contracted each month. The employment figures are compared and contrasted to previous months. Conversely, if there are more workers than open positions, it can indicate that economic growth is slowing and unemployment may increase. The overall trend in inventory levels and whether they're increasing or decreasing can help provide insight as to the level of demand for the services within specific industries. It can be a leading economic indicator when demand is high and it leads to lower inventory levels. As such, it demonstrates the health of consumer spending as higher spending leads to higher economic growth. The report also shows which service industries reported an increase in prices paid for various raw materials and goods. The price paid could also include services that companies needed, such as software services. The prices paid for services and goods by companies may indicate inflation, which measures how much prices increase in an economy. Inflation is likely if businesses pay higher prices. Higher prices could also indicate a shortage in supply for particular goods. As noted above, the ISM reports economic conditions through 3 indexes. The first is the Services Non-Manufacturing Index, PMI, while the other two are the manufacturing PMI. This index used to be called the ISM Manufacturing Index. It surveys manufacturers to determine the level of output and economic activity in production facilities, as well as the commodity purchases and inventory that are used to produce those goods. Hospital PMI. The ISM collaborated with the Association for Healthcare Resource and Materials Management to develop this index. It is based on a survey of hospital supply executives about hospital supply chains. The index, which covers ambulatory, inpatient, and nursing home type facilities, is used by supply chain stakeholders as well as healthcare policymakers and executives. What's the difference between the ISM Non-Manufacturing Index and the Services PMI? The ISM Non-Manufacturing Index and the Services PMI are the same thing. The index, which was previously known as the Non-Manufacturing Index, is now known as the Services PMI. The index provides a reading that is based on surveys sent to executives of purchasing and supply companies of more than 400 service companies. What does the Institute of Supply Management do? The Institute of Supply Management is a nonprofit organization for the professional supply management sector. It was established in 1915 with more than 50,000 members in 100 countries. The ISM provides education, certification, development, and research for leaders across various industries. Is the Services PMI a leading indicator? Yes, the Services PMI is a leading indicator. That's because it gives stakeholders an indication of the state of the economy. It measures the sentiment and activity within the service sector by surveying executives of 400 service companies. Leading indicators help economists and investors predict the economy's direction. The ISM Non-Manufacturing Index, or Services PMI, is a critical leading economic indicator for understanding the U.S. services sector. It's compiled from surveys of over 400 service firms, purchasing and supply managers, covering more than 15 industries. This monthly report provides insight into how the executives of service companies feel and how these companies are operating. It shows that a reading above 50 indicates growth, while below 50 signals a decrease in activity. Investors can use this data to make crucial decisions about where to allocate their money. Consider integrating the findings of the Services PMI with other indicators, such as the Manufacturing PMI, for a comprehensive understanding of the overall economy. Stocks 5150, Peace